In today's video, we're breaking down another clip from Matt Hougan, where he unpacks the macro shift of the markets, where the previous money flow cycle for crypto may be broken, and we have to look at now evaluating assets as fundamentals and no longer just speculative. So
every minute you wait, Bitcoin climbs higher. The difference between success and regret? Taking action now. At Drip2BTC, you get more than just Bitcoin. You get growth, security, and peace of mind. Buy Bitcoin, deposit it, and watch your future transform. No risk, no reward. Start earning at Drip2BTC.com.
Stay tuned. Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. So Matt Hougan, you saw me mention him previously. He is the CIO of Bitwise, and he still believes in the 200K Bitcoin price prediction by the end of the year. But Bitcoin can be headed towards a shift, or at least crypto in general is headed towards a shift, and led by Bitcoin. And what I mean by that is that there will be less and less speculation going forward and more about what are the sound fundamentals being integrated into the network. So less gamblers and more long-term strategists moving into the market. So let's play this clip.
I would just add, from my perspective, the investors I speak with and the people who I experiment with thought wits in the crypto market think that we're moving into sort of a fundamental market where there is more differentiation between this project and that project than we perhaps had in the past. I think that's somewhat what Matthew is speaking towards. You can make a fundamental case for Hyperliquid. You can make a fundamental case for Bitcoin right now. You can make a fundamental case for certain DeFi protocols. And I think people are going to be focusing more on protocols and projects that are demonstrating fundamental traction. There are actually significant bull markets in parts of crypto right now from a fundamental use perspective, whether that's stablecoins at all-time high, whether that's real-world assets at all-time high, whether that's some of these derivative platforms at all-time highs. Those are really happening. And I think people are just focusing more on idiosyncratic fundamentals than sort of this broad alt-season risk-on trade. I think that may not be a feature of the next year. I think it may be more idiosyncratic and fundamental than it has been in the past. I feel like crypto feels entitled to what it's had in previous cycles, which is you go into Bitcoin and then you rotate in ETH and then you move out the risk curve until we're all buying digital rocks, and then we reset. And I just think the market has changed. That's true of an asset where the primary value is the speculative value, where the primary thing the asset class is talking about is what might happen 5, 10, 15, or 20 years in the future. In that world where the speculative premium is the dominant driver of returns, it makes sense just to roll out the risk curve, and what you buy is less important than its vol and its riskiness. But I think we're entering a world where crypto is driven more by fundamentals. And so you're going to see people picking apart different L1s. We actually saw that.
That hit me kind of like a ton of bricks, but it goes still in line with the Raoul Pal don't fuck this up thesis and how I position my portfolio. So that's why I've only bought alts at 2 occasions. And yeah, they are still down right now, but that flies directly in the face of this crypto money flow cycle that we have seen historically. And I can't say for certain if what Matt is saying is going to be true or not, but I'm picking up what he's putting down, and it's like it does make sense. As more and more savvy investors enter the market, they're entering it based off of long-term fundamentals. Where can they park their capital and make money? They're not trying to get in and get out and make flips. This whole cycle was born from retail and all about making flips. So going from fiat to Bitcoin into large caps, then from your large to your mids and your mids to your smalls. Well, that may not happen the same way it has happened the last 4 cycles. And that's just something we have to be aware of. So that's why, again, in my portfolio, I'm not signed in, so I've only purchased 2 times, and I purchased the same alts, basically. I think it's a total of 22 of them. I think it's in the 20s, but I haven't bought again, and I will not be buying again. I'm just gonna be putting the rest in Bitcoin at this stage. And I'm not even rolling into ETH or Solana with the additional capital. It's just primarily Bitcoin. And I realize that may limit the amount of X's I could see in my portfolio, but for me, there's just too much uncertainty on how the entire macro side of this will play out. I still believe that money will flow into these alts, just because I believe there's just going to be a butt ton of money flowing into the crypto market in general once the money printer goes burr for the global economy, and that'll just trickle its way down. But because there's so many of those alts and so many different fundamentals, it's for me, it's too much gambling on, who's going to be the next Facebook and who's going to end up being MySpace, who's going to be Ask Jeeves and who's going to be Google. I don't know. So I don't feel like trying to bet on that because I have not done enough research on that. So instead, I'll just take my capital and park it into Bitcoin. That's my play. I still believe we'll have an alt season, like I said, but I don't know how profitable and or violent it will be. Let's go to the next clip.
In 2024, and just no one talked about it, right? We saw Solana ripping and ETH falling. That wasn't a risk on risk off trade. That was one L1 that was capturing real fundamental growth and another that was experiencing a fundamental decline. And we got very divergent returns. I think you're going to see that on each and every asset. I think that's going to be the defining feature of whatever this next cycle is a more fundamentally driven cycle with more differentiation between products that are gaining traction and other products that aren't, and less just sort of spray and pray allocation to risk on assets in general. I think Solana needs to recover from that only pump.fun narrative and find other fundamental use cases and other fundamental traction. But when you look at, revenue versus market cap, it does look attractive, right, on a comparative basis. It's also fair to note that this criticism of it's only fun, it's only, absurd projects has been true of every technological revolution ever, right? The early days of the internet was not, people doing the majority of their work on that market. It was just a plaything. It was just a toy, maybe illicit activity. So I think people can look past that. But what I was driving at more was people are looking, past the broad narrative to what are we seeing from a revenue perspective? What are we seeing from a user adoption perspective? And that's going to determine where people allocate in the future more than sort of broad paintbrushed in the past. I mean, the 10-year treasury market has been crazy. It's been bouncing around like a meme coin. From a yield perspective, it's been completely wild. I think what it's signaling to Bitcoin investors long-term are two things, which are almost go back to our short-term versus long-term perspective.
So that, again, is an interesting kind of take on this. And I like listening to people like this talk about this because they're coming from that other side. So I came into this as the speculative, retail, crypto bro, how can I make a quick flip? And then now as this gets more mature, you have the people like Matt Hougan, Rao Powell, Jeff Booth, all these guys, Lawrence Leopard, coming in from their TradFi backgrounds and evaluating crypto through that lens. So they're taking their history and expertise and going, okay, how do I look at this new emerging sector? And I made all my money in the other one doing these sound principles. I'm going to do the same thing here. So if that's the case, and that is happening right now in real time, we're seeing that kind of money come in, especially with the ETFs and stuff, well, then that means it's going to change how these different alts perform because there's going to be more money coming from that other side than it is just the speculative retailer looking to just flip into the next cycle. So part of me believes that it won't completely mature in this cycle, and we'll see this kind of finalize in maybe the next one or two, kind of going into 2032. Yeah, 2030, 2032, kind of lining up with Rao Powell's everything code thesis and kind of a big AI tailwind. So I still think you have some time to obviously capitalize on the alts, but I honestly have no idea. All I can really say with absolute certainty, and that's where my conviction is and where I'm putting my money, is just gambling on Bitcoin. Everything else, it just right now seems too many unknowns, and I don't honestly know what to do with it. And it feels exactly like gambling on shit ton community projects like Drip back in the day, or just meme coins and hoping that you hit the right one. So I think slowly gone are the days of being able to just pick any token in the top 100, 200 and you get rich on it. Might still have the likelihood play out in this cycle. That's what I gambled on earlier. But listening to him and then seeing how this is tracking on the global macro financial side, it's like, yeah, things are definitely changing. I'd be a fool to not pay attention to those and expect it not to affect me in one way or the other. And the only way to ensure I make it out the other side is to hedge my bet with Bitcoin. So we'll finish this up with his take on the bond market.
The 10-year treasury market has been crazy. It's been bouncing around like a meme coin. From a yield perspective, it's been completely wild. I think what it's signaling to Bitcoin investors long-term are two things which are almost go back to our short-term versus long-term perspective. So what it's signaling from a short-term perspective is that, whoa, things are changing. We don't know exactly how things are changing, but we know that things are changing. We know maybe that the world is losing its sort of appetite short-term for treasury exposure as a safe haven asset. It's introducing, from a short-term perspective, volatility and risk into people's mind. And because Bitcoin has elements of being a risky asset, that's challenging to Bitcoin from a short-term perspective. I think from a long-term perspective, what we're seeing out of the moves in treasuries and in the dollar is that we're sort of moving to a new monetary order, to borrow Ray Dalio's term. And I think that's opening up a window for Bitcoin to get a major seat at the table. So from a long-term perspective, what I see is that market significantly expanding. Again, short-term, it makes the market riskier, which causes Bitcoin to face headwinds. Long-term, it's a resetting of the monetary order, which causes hard value, store value assets to increase, and I think raises the long-term price target that I and others have for Bitcoin. So it is a best of all worlds, worst of all worlds sort of situation, depending on your time preference.
So to me, that just puts a pin in it. It's clear I just need to have a longer time horizon, because that's the only way that this story ends. If I'm trying to look at it through a short-term lens, I'm going to get wrecked, and nobody knows where the hell it's going to be, because like he said, bonds are trading like meme coins in regards to volatility, and even the stock market itself, and even Bitcoin, like with Trump making tweets, literally it can swing 20-30% in one day. So that is not something I want to be trying to hedge my bet on, because there's no way to know how that's going to pan out. But if I instead focus on just stacking sats and spend less than I earn, then I should be okay by the end of this. Because like I mentioned in other videos, the end is inevitable. The fiat currency Ponzi always collapses. It's not going to say we're going to go back into the feudal dark ages or anything like that, but there will emerge a new standard. And I believe sound money principles will be at the core, but it cannot erase the stranglehold that political governments have on control. They're not going to give that up very easily, central banks and stuff like that. So I believe, as I mentioned, the next financial breakthrough or change will be digital IDs coupled with central bank digital currencies. And at the core will still be gold and Bitcoin. But a lot of the major countries will roll out some form of digital currency that they can control and wipe the balance sheets of the old guard. Like that's the cycle. And hopefully that doesn't mean a war has to get there, like Ray Dalio's New World Order. Maybe it could just get there through maybe just a trade war and not the physical bloodshed war. But either or, the outcomes are devastating for both sides. But realize that is the inevitable outcome. Like, don't know when, but that is where this goes. There is no other option. So the only thing I feel you can do is stay humble and stack sats. All right, smash that HBO special. Help brother out. Like, subscribe, comment down below. And until next time, live daily and achieve your impossible. See ya.